one of you should read for us. Because of time, let's be snappy about it, please. Okay, Prof. Portia, please read it for us.
Say please, I'm coming. Say please, good morning.
Good morning.
The following transaction relates to Mr. Youngson Limited for March 2008. So first March, he started business with 1,000 Ghana cedis cash, and 5th March, he bought goods worth 250 cedis on credit from KK, and 10th March, he contracted a loan of 500,000 and opened a bank account. 15th March, he bought vehicle 250 cedi paying by check. 21st March, he cash purchases of 180 cedis. 26th March, he paid Jackie 250 cedi cash. 30th March, withdrew 100 cedis for private use from the bank. 31st March, he bought goods on credit from Evans, 150.
Okay.
Please, I'm done.
Okay, thank you very much for that. So, professors, as she read through, you can appreciate that most of the things that we're discussing together, i.e., the owner investing in the business, purchase or buying of goods, contracting a loan or acquiring a loan, buying fixed assets, drawings, as in the owner taking something for personal use. You can appreciate that they are all evident in this particular illustration. So the requirement is to prepare the ledger account, and as I indicated to you, that means you should draw your T account and apply the double entry principle, which says for every debit entry you make, there should be a corresponding credit. And for the past days, we have been very judicious about discussing the double entry principle and how to prepare the ledger account. One thing I want professors to appreciate is that as you read the transaction, okay, you have noted that mainly you need two accounts. One will be debited and the corresponding credit will be in the other account. So it's always important for you to identify those two elements in the transaction. And this element could be an asset, a liability, capital, and expense and income, right? So as you identify those two things, then you can go ahead to ask yourself, is it increasing or decreasing? Then you apply the principle of when assets increase, we debit. When they decrease, we credit. And when capital increases, we credit. When it decreases, we debit. And for liability and income as well, follows the same as capital. When they increase, we credit. When they decrease, we debit. Okay, so let's begin. So the first transaction is, well, it's always important you write the name of the business. So here we have to acknowledge that the information relates to Mr. Youngson Enterprise. So you need to put down the name of the business. Or you can simply say in the books of Mr. Youngson. And during exams, you are awarded marks for noting the name of the business. So please, it's a bonus mark you can earn for yourself on the silver platter. Now, after that, you go on to start. So we are told on first March, started business with 1,000 cedis cash. Professors, at this point, you are going to be doing the analysis and telling me the two accounts. And of course, tell me the one will debit and the one will credit. So Portia wants to take the first one. I need more hands now because this is something we've been dealing with over the past weeks. I need more hands, please, professors. Show me more hands. Prof. Francis. Prof. Francis. Okay, I have Josephine too. Prof. Francis, can you share your idea on the two accounts you can see here? Or better still, if you can share the asset, liability, or capital you are seeing here, then we can continue. Unless maybe you missed one of the classes, so you are not too sure. Let me hear from you. I'll be willing to hear.
I missed one of the class, so I'm not sure. So
Okay.
I don't have any idea on this one.
Okay. So you see why. Well, so you may have to follow on the videos, right, to quickly. But if you have any challenge, you reach out to me so that I can sort it out with you together. Okay.
Okay, so
Great. So let me see. Prof. Emmanuel. Prof. Emma. Did you? Yeah. Can you share your thoughts, or you also missed the point, and so you would hold on for now?
Say, please, I'll hold on for now.
Okay, that's fine. Okay, so I have Portia, Josephine, Akoli, Austin, and Zoe. Okay, let me call Portia and so Portia, tell me the two accounts, and then Josephine will add which one to debit, which one to credit. Okay.
Okay, so say there'll be increase in capital by 1,000 cash, and there'll be increase in assets cash by 1,000.
Okay. So the two accounts are capital and cash, right? Capital and then the asset cash. Thank you.
Yes.
So Prof. Josephine, which of them would we debit and which of them would we credit?
Sir, please, we are going to credit the capital and we are going to debit the cash.
Thank you very much. So for the sake of my other professors who may have missed some point, you remember we saw the transaction about the owner making investment or starting a business. So professors, anytime you see a transaction, that gives you indication that the owner is starting a business. We indicated that there is going to be capital, okay, because whatever the owner invests in the business is called capital. So there's going to be capital, but again, you see that the capital the owner invested is cash. So the two accounts are capital and cash. Okay, the capital defines the resources that the owner has invested, and the cash tell us the particular resource that was brought into the business. Okay, so we have capital and cash. So for the sake of Salom and Ima, anytime you see the owner started a business or the owner introduced an asset, the two accounts are capital and the asset. But most of the time, the asset is given specifically. So in this question, the asset given is cash. So we are going to open the two account for this element, capital and then cash. Okay, now after that, you need to pass your entries. That's do the debit and credit. And for us to do the debit and credit, I think we went through the effects. So those of you who have not watched that video, or missed and have not watched, please go and do so. So we also indicated that anytime the owner makes an investment, there is increase in capital as well as increase in asset. Here, the specific asset is the cash, right? And per the double entry principle, when capital is increasing, we credit it. Meaning we go to the left side, the right side of capital account and put the entry. The entries we put there are the date. So we put the date, and in the question we have 1st March 2008 or 2008. So you put in the date. The next thing you put is the details or particulars, which is normally the other account you are going to pass the corresponding entry. So we are crediting capital. The corresponding entry will go to cash account. So the details here will be cash. Okay. Then you put the amount there, 1,000. And I indicated to you that you always need to put the currencies in your amount column on both sides. So let me do that. Okay. So this is what you do to record the credit or make the credit entry in the capital. The corresponding debit entry will be in our cash account, right? So in the cash account, that one will come at the left side or the debit side. So that one, you put the date, which is 1st March 2008. The details will be the other account, which is capital, right? And the amount is 1,000 cedis. So this is how we record the first transaction. So as we are moving on, we're drawing conclusions and summary. So please just get this once and for all. Okay. Anytime the owner starts a business or makes an investment, you know the two accounts are capital and the asset. You always credit capital and you always debit the asset. Make sure to use the name of the specific asset. In this particular question, it was cash. That's why we opened cash account. If the owner invested building, then we would have opened building account. Please, any question? Okay.
No, please.
Good. So let's continue with the second transaction. So Prof. Ima and Prof. Francis, I hope you somewhat appreciate the first transaction. So going forward, if you see any transaction like started business or the owner invested something, you know how to record it. Okay. So let's go to the second one, which says bought goods worth 250 on credit from KK. Bought goods worth 250 cedis on credit from KK. Prof. Augustine Akoli.
Yes, sir.
Yeah, I want you to look at this one for me.
Yes, sir. Which one? Mother was calling me, so I was not actually here.
Okay, so the second transaction, bought goods worth 250 cedis on credits from KK.
Oh, okay, so that means it will increase in asset goods and increase in liability.
Okay. So what two accounts are we supposed to open, and which one will we debit and which one will we credit?
So I think we must open the liability account.
Okay, so do we have the specific liability?
KK.
Okay, KK.
Yes, sir. KK. Yeah.
Okay. And what of the other account?
The other account will be the asset goods. So the asset goods.
So are we supposed to open goods account?
So stock account.
Stock account. Really? Prof,
Yes.
Prof, you owe me a knock. I'll have to knock you for this one when you come back to campus, because I remember stating here categorically that we don't open stock accounts. We rather look at what happened to the stock and we use that for that account. So let me go on. But the other side was correct, as in the part where there's increase in liability, creditor KK was accurate. The other side, you got it correct, except that you are giving me the wrong account. So who is going to bail him out? Josephine. Okay. Let me hear
Sir,
Josephine.
please, purchases account.
Purchases account. So Prof. Akoli, we don't open the stock account, we don't open goods account, we open purchases because we purchased. Another term for bought is purchase, okay? And we don't open bought account, we open purchases account. So again, for the sake of my professors, Francis and Ima, if you see anywhere a transaction that reads bought goods or purchased goods, I'm repeating it again, bought goods or purchased goods, the first account you think about is your purchases account. Your purchases account. The second account depends whether you bought it with cash or with check. If you bought it with cash, then the second account will be cash account. If you bought it with check, the second account will be bank account. If you bought it on credit, that's you didn't pay, the second account will be the creditor from who you bought on credit. So here in this question, we bought it on credit from KK. So KK is our creditor. So the two accounts you are supposed to open are purchases and KK. So let's go and open that. So we have purchases account and then we have KK account. KK. So KK is a creditor, right? But we use the name of the creditor KK. Great. Now, who are we going to debit and who are we going to credit? My able professors, anytime you buy goods, you debit purchases account. Why are we debiting purchases? Because if we look at the effect, it leads to increase in asset stock, okay? Because when you purchase goods or stock, your stock will increase. But like I'm saying, the account we open is purchases. So the purchase account will be debited because it is recording the increase in asset. And we say when asset increases, we debit, right? Now, for the KK, which is the creditor, that is an increase in liability. And that liability is KK, a creditor. Okay. And per the principle, if liabilities increase, we credit. So that's why we are crediting KK as well. So let me pass those two entries. I saw a hand up. Is that a question for me, Prof. Osha?
No, please.
Okay. So we always debit purchases 5th March 2008. The narration will be KK, which is the other account we are going to pass the other entry. The amount is 250. We come to KK's account and credit it 5th March 2008. Purchases 250. And that is all. Okay. So professors, anytime you see bought goods or purchase goods, purchase account is the first one. Then the other account could be a creditor, cash, or bank. Okay. Let's go to let's look at the 10th March transaction and then we'll continue in the next session. So the 10th transactions or the 10th March transaction says contracted a loan and opened the bank account. So the business went for a loan and they put the money in a bank account. So professors, what is going to happen? What two accounts are we seeing here? Okay, so because of time, let me be fast. Portia, go ahead.
So say, yeah, bank account and cash account.
I will accept the bank account, but I will disagree with the cash account.
Okay, say capital.
Again, I'm disagreeing with capital. Okay, so the business went for a loan. Austin, would you share on this one?
Sir, please, bank account and loan account.
Exactly. So Portia, you missed the loan account. So it's your bank and then the loan, right? These are the two accounts. The bank is an asset, and of course, it will increase. So increase in asset bank, right? And the liability loan will also increase. Increase in liability. So able professors, again, anytime you see that the business is taking a loan from a bank or taking a loan from any company, the two accounts that are obvious are the loan account, okay, and then the bank if the loan was put in a bank account. If the loan came in the form of cash, then the other account will be cash. So let's get that straight. Now, what do we debit and what do we credit? If you look at it, your bank is getting more money, right? Portia, I'm sorry, let me do this because of time, okay? Yeah. So bank is increasing and bank is an asset. So we'll have to debit bank, and the loan liability is also increasing, and we have to credit the loan account. So anytime you take a loan, you credit your loan and you debit your bank if the money was put in bank, or you debit your cash if the money was received in cash. But like I indicated the last time, make sure you don't duplicate any account. So let's check. We are supposed to open loan and bank account. Let's check if we have not opened any bank account. Okay, so we haven't opened any of that account. So we go and open the loan account, and then we open the bank account. So like I told you, anytime you take a loan, you credit the loan account. So we put the date 10th March 2008. The narration will be bank, and the amount is 500. Then in the bank account, we debit 10th March 2008. The narration will be loan 500. Make sure you put your currencies in your account amount column specific. Okay, any questions so far?
Oh, please.
Okay, so unfortunately, my late comments, you might have missed 3 important points, but of course, when we come back, we'll try and get you up to speed and continue. So let's all join the second session so that we can continue from there. But if you have a question, we have some 2 minutes, you can ask your question before we zoom into the second session. Okay. As always, no question from my professors. So let's meet in the second session.